Good morning, everyone. Good morning. Hope I am audible to all of you. Yes. So,
Yeah, you are audible. Yeah,
today, on a powerful Sunday, we are going to discuss regarding the mastering the Fibonacci trading clusters. I am your Raju Angadi Vishwanath, RV, a SEBI Registered Research Analyst, a certified financial technician, as well as a chartered market technician from US. So, in this session, we are going to learn how we can plan our Fibonacci trading clusters, which is one of the powerful techniques to identify the key continuation and reversal points. Before that, I'm going to brief about me. I already introduced a small introduction. I am a CMT and CFTe from IFTA US and also a SEBI registered research analyst. This event is organized by Fabinars. So, guys, let's start the powerful session. Hope all of you are ready, guys. So ultimately, we have to identify. Last week, we have discussed regarding the moving averages, which can be used as a one part of a trading clusters. There are 5 different trading clusters. This educational series is to help traders to apply the real-time trading techniques to identify the key supply demand zones, which is the part of price action where we are going to discuss and understand the zones. So great, my dear friends, here in this session, as we have discussed the use of moving averages in the previous week session and the video, now we can get into, okay, great, somebody is speaking, turn off the audio, yes. Bear with me for a moment.
Giusto per la
So great, my dear friends. I have muted everyone. Now we will have a separate Q&A session where we are going to discuss. Before that, we are going to learn certain aspects of trading here in the session where we are going to apply the Fibonacci clusters and understand how the Fibonacci works and how it is a nature's law, how it can be used as a trading clusters. So the Fibonacci retracement as well as the extension in the practical application with the charts also we are going to discuss. I'm going to take a Q&A also where your own charts where I would apply the Fibonacci and use it and showcase it to you. See, always a power of defense. I believe in power of defense. If your defense is strong, you can attack any time. So that is the key towards trading. If you can protect your capital and if your defense is strong, that's why I believe trading clusters are the key to successful trading. Identifying the key supply demand zones is the important core confidence zone where you can be successful in your trading. So guys, let's kickstart with the power of defense. Again, I'm going to repeat the last week's powerful word. Offense can win you games, but defense can win you championships, as quoted by Becky Novak. I'm going to give you a small puzzle here. There are 9 dots. Just connect these 9 dots with 4 lines without lifting your pen or pencil. This is a small sharpening your brains. As it's a Sunday morning, I want everyone to act. I'll give you a minute. A small puzzle where how you see the charts, how you do your analysis, and think out of your box is very much important. So for that, I'm giving you a minute's time with a small puzzle. Are you guys ready with the puzzle? Connect the 9 dots with only 4 lines without lifting your pencil or pen. Say yes in the chat box if you are ready with the puzzle. Connect these 9 dots with 4 lines without lifting your pen or pencil. Great, Mr. Sahu. Great, great. Abhay Kumar ji. Okay. Have you done, anybody have solved this puzzle? Those who have been our regular attendees in the last week's session, I have briefed out a bit. It's a brainstorming puzzle, a small puzzle. I'll repeat again the question. Connect the 9 dots with 4 lines without lifting your pen or pencil. Anybody is able to complete the puzzle? If you are completed, say yes. Oh, great. You can use your pen or paper. It's not here where you need to solve the puzzle. So that's okay. Time's up. I'm going to share it in a simple way, because technical analysis and identifying the right supply demand zones with the price clusters, it's very much important to understand and open up. That is what I meant to solve this puzzle. Like line 1, we connect these dots like 1, 4 and 7 with the line extension. Line 2, where it connects a yellow line with the 8 and 6 lines, then you are going to reverse back with 3, 2, 1, and a line 4 which stretches, so it's a kind of a kite. So just a small adjustment with thinking out of is very much important in doing your analysis and identification of the right entry point with the low risk high reward trade setups is the key to successful trading. So let's start with the Fibonacci origin and introduction. Fibonacci was discovered by Leonardo Fibonacci di Pisa in the 13th century. It was invented in 13th century, but our Indian ancient architectures do reflect the use of Fibonacci. Different architectures have been developed with the precision calculations with the Fibonacci. Here are the series. So no, why I am telling you the basics, because using these basics only we are going to implement the ratios. Understanding the ratios is key, and the adjustments of the Fibonacci grids, what we do with the retracements and extensions. How you understand the Fibonacci and plot it is very much important. So a series of Fibonacci numbers starts with 1, 1, 2, 3, 5. So what you are doing, 1 plus 1, you are adding it, it becomes 2. 1 plus 2 becomes 3, sequentially preceding numbers you have to keep on adding. So 2 plus 3 becomes 5. The Fibonacci sequence and the series starts. So it's like how many pairs of rabbits in an enclosed area can be produced in a single year from one pair of rabbits. If each pair of rabbits give birth to a new pair starting with the second month, that's equal to Mr. and Mr. Rabbit's family would be 144. That's the nature's law. So basically Fibonacci series, the golden ratio is what we call it as. So it's subdivided into ratios, like what we can call it as 38.2%, 50%, 61.8%, and 100%. From 0% the series starts, like we can divide it as golden ratio, we call it as the 61.8 retracement, which is the key ratio. The computation, how you do it, like having a sequence of Fibonacci numbers, what we are doing it here, like let us take any of the random numbers. As we have seen here, 5 by 8 is 0.625, 8 by 13 is 0.615. How the golden ratio is calculated? 13 by 21, it's 0.618, which is the golden ratio. Then you need to have a gap of one number in between, like 3 by 8 is 0.382. You can see it. 5 by 13, if you calculate it, I'm going to show it to you with a calculator which simplifies the concepts. 5 divided by 13, it's 38.4. Let's say 13 divided by 34, again 0.382 is the retracement zone. This is the power of sequence of numbers. 34 divided by 89, 0.382. 89 divided by 144, 61.8, 0.618, which is the golden ratio. This is how the calculations are done. 1 by 2 is 0.5. 3 by 2 is 1.5. So this is how the ratios are calculated with a Fibonacci sequence of numbers, which we are going to use. The magic of Fibonacci is our human body is even designed with the Fibonacci sequences. I'm going to apply the same with the Nifty, even on the larger degree and the smaller degree charts. What is happening? So I'm going to show you the enormous and humongous number of examples with the markets where the trading can be done from a 1 minute chart, a 2 minute chart to weekly charts. How you can plot your charts and apply the same with the Fibonacci. Like human body, any human being, you take it as a calculation from your head to your toe, it's 100%. From your toe to your waist, as we are seeing it, from your toe to your waist is 618.618, that is 61.8%. From your waist to your head, again it's subdivided it, it's 0.382, that is 38.2%. Roughly 38% from your waist to your head and 62% from your waist to your foot. Similarly, from your toe to your knees, it's 38.2. Again, it's a subdivided. From your knees to your waist, it is 61.8. Irrespective of your height, like if you are 5 feet, 6 feet, 7 feet, or 8 feet, or 4 feet, This is how the human body is designed. Why we call it as the nature's law? That is the power of it. Here we are seeing it in a similar fashion. From your waist to your neck, it's 0.618. From your neck to your head is 0.382. This is how every human being is designed. So guys, today you want to check your high Fibonacci calculations and the measurements with a measuring instrument with your own body. You can check yourself. How many of you want to check yourself? Do you want to check the measurements of yourself? Say yes on the chat box. Interesting, right, my dear friends? It's quite interesting. Yes, definitely. It's really quite interesting if you can measure yourself, as it is a nature's law. Markets work with the nature. If you can apply it diligently with the other techniques and parameters, obviously you are going to get the awesome results. Let's get into it in more depth, and let's understand the techniques of using the Fibonacci. I am going to provide a glimpse of it. Today we are going to discuss just a tip of iceberg. If you start reading the Fibonacci and get into it, 1.5 hours is not enough to complete the detailed and practical application of Fibonacci series and sequences in your trading. It requires more than a day or 8 to 10 hours rigorously with the technical application of it. To master the Fibonacci, at least 2 days of classes needs to be done. That is the depth of Fibonacci series and sequences. So coming back to the again session, how many of you know that the sunflower is designed with the Fibonacci spiral? Let's see it. See, this is how the spiral is designed in the Fibonacci sequence, and where we are seeing in a similar way sunflower buds are designed. Oh, why it is important? We are going to learn with the charts. Bear with me, understand the concepts until it is explained. Then we are going to have a Q&A and the practical application of charts, where we are going to see the screens with the Nifty stocks or any index, let us say Bank Nifty, Mid Cap Nifty. I'm going to show you the power of Fibonacci. So let us have a sneak into the ratios. Like the key ratios are 0.382, 0.5, 0.618, 0 and 1. That is what we call it as 0, 38.2%, 50%, 61.8%, and 100%. Extension happens in a similar way: 138.2, 1.382, 150%, 1.5, 161.8%, that is 1.618. The other ratios are 0.234, 0.786. So usually Fibonacci ratios are used for price retracements, as we call it as, and the price extensions to identify the swing highs and swing lows. The marking is done from the point A towards point B for to understand the retracements or to project the targets. Price targets can be projected or supply demand zones can be identified with the Fibonacci. So that is why the major Fibonacci extensions are used for price projection methods, as I explained. The key Fibonacci ratios is used to plot the retracements to identify the swings from A to B price as it is. Like here we are seeing an example how the Fibonacci ratios are marked. This is a bank nifty chart, basically from a starting point of the move where a point A is marked towards point B, where major moves have come. So we have marked the start or initiation point as A, and also we have marked a B here, which is the end point. So start to the end, a move has happened. Then the markets have started correcting. It has retraced how much? 50%, right? So where the more number of points connect, we have marked the as the fall has started. Point C is marked, point D is marked, point E is marked. Yes, it's a 50% retracement. Now the beauty of it, how to trade this? It's in a simplistic manner. A, B, C, D, E is marked. Again, D1 is marked, which is actually a demand zone. D and D1 becomes a demand zone now. Below this, one can place a stop loss. E and E1 is marked, so that becomes again one more demand zone. As the reversal occurs, price starts moving above with a strong bullish candle, a large candle above the moving averages, as well as 38.2 or 61.8 golden ratio point level has been crossed. A small trend line, if you draw, it has been broken with all the convictions. Here one can buy with a stop just below. Basically, let us say with the green averages above, if we are buying, see, so Dow theory, swing highs and swing lows, obviously you can use it, but the retracements, I am more of a context here. We are discussing regarding the Fibonacci sequences, how a simplistic manner would help us with a low risk, high reward trade setup. So basically, what we are doing here, let us say 30,765. Once it crosses above, we are entering 30,800 is the entry point, with the stop below 30,650. 150 points, like 30,500. Let us say 30,500 is the 38.2 retracement, which can be a golden ratio. So some 300 points risk, we are entering a trade with a target of 31,784 to the swing guys. So stop loss is quite tight. Even the previous two candles low can be kept, or one candle low as the bell told candle. Stop loss we are going to discuss in another part of the session. Here we are discussing mainly basically how the Fibonacci grids can be used as a supply demand zones. That is what we need to understand. Now we are discussing on a presentation here. I'm going to get into the charts, the core part of the charts, a real time last week what it has happened, how the Nifty is behaving in a current Fibonacci structure. That makes the session more interesting and interactive with the practical aspects. But initially we have to understand how to mark the zones, a starting point and the ending point from 0 to 100. Let us say how you mark is a 50% retracement what has happened, and we are marking the other zones like A, B, C is been marked, where the price retracements have happened and multiple supply demand zones have occurred. D1 has been marked, which is a demand area again. E and E1 also, where it was a supply area and a demand area in both the scenarios. Always watch the chart from right to left to understand the concepts where the supply demand zones can be marked, where the more number of, see, technical analysis, what do you call it, guys? Where the more number of points connect. It's all about where the more number of points connect. It's all about connecting the dots. See, Mr. Satish, what I would like to say is very simple. You can use the Fibonacci sequences from 1 minute chart to weekly charts. I'm going to share it with the application based on the time frame. Obviously, the targets and the objectives differs. Any time frame it can be used. It's this is looks like a 15 minutes chart, I believe so. So the entry could have been taken with the averages as we discussed in the last week, the moving averages. If the price is trading above the key averages, the entry could have been taken here with the price objective as the fib cluster. It's not like that any time frame based on your trading objective. Obviously, you can use it as a part of your analysis to equip with. We need to use the different tools. It's always a combination of tools that would yield you and give you a very good results, is what I believe. So this is how you mark the points. Understand it right to left, watch the screen, take the entry and exit, define your supply demand zones, then plan your entry and exit points. That is what I call it as triple E's: entry, exit, and error. Entry point, that is buying point; exit point, that is selling point; error is your stop loss. These 3 points can be defined by understanding always the range and the supply demand zones. That is what the Fibonacci. Here we are learning how the retracement is helping us to take the entry. In our day trading also, this can be used in a beautiful manner in different aspects of it. I'm going to show you. Don't need, no need to be in a hurry. We are going to apply it practically in all the aspects. Yes, point E is the point of concentration, where after a swing high is taken out with the averages closing above and the golden ratio is crossed, multiple points are indicating that the reversal is happening. Along with that, we are seeing a strong reversal from the golden ratio point with the swing high taking out. One can enter the trade with that, with the stop below only the previous candle low. A small stop, the stop losses can be adjusted in different ways, that we will discuss it in the other part of the session. See, I'm going to repeat it again. Those who are not understanding, please write up in the chat box. I'm going to repeat it again. The starting point to draw the Fibonacci is from a point a start point, and the point B. Yes, from low to high, from the starting point where the trend starts towards the high point, end point is point B. So there, low to high, we draw the grid. Then from right to left, we see the charts. Yes, from low to high, Mr. Samson, from low to high, swing low to swing high, we are marking the starting point to the end point of the trend, where from there the grid is drawn. I'm going to show in the charts. Bear with me, have patience, understand it in a simple way. The starting point, a point A and the end point is the point B. So there you are drawn a grid. Now in between you have to bisect where the more number of supply and demand zones come in, where we can connect, like C. Definitely, I'm going to show it on the intraday charts. Please bear with me, Emlata, for few minutes. Once we complete the part of it, I'm going to explain. You are going to learn. You are going to understand how to apply it in a very, very simplistic manner in the intraday as well as even on the weekly charts. It's not even on the daily, like 2 minutes charts to weekly charts I'm going to showcase in the charts. So no need to worry, no need to hurry. Let's learn, earn and prosper, guys. Have patience, understand the concepts, like how we are marking it here. After starting to ending point, what we are doing it, we are marking it here with the different zones, like point C is marked after ABC, where 23.6 retracement is there, and also the grid adjustment needs to be done where the more number of supply and demand zones come in. So from that point again, point D is marked, which is the 50% retracement, where it acted as a resistance previously, a supply zone, then now it is acting as a demand zone. Then after the reversal, the golden ratio is crossed from here, that is where point E and E1 is marked. So that is the beauty of Fibonacci. One can enter at this point above the moving averages. Once it starts moving, the momentum gains. So that is how trade setups can be identified with the combination of last week what we have learned, the moving averages as well as the Fibonacci on a retracements. See, it's all the combination of tools in your analysis that will help us. Now I have eliminated everything in a simple plain vanilla chart. I am showing you the hourly chart of crude oil, how the point A and point B is marked. See, it's all about understanding and marking the key cluster zones where the reversal and the probability of zones can occur. See, we have started drawing from point A to point B where the marking is being done, start of the trend to the end of the trend. Then what happens? The retracement starts, price starts falling in the crude oil in an early chart from 3940 to 3205. From there, the retracement starts happening. So how we are marking it, like point C where the retracement has been marked, the first retracement, then the D has been marked, E1, E2. From where one can start selling is E1, then E2, where the price starts cracking down. The downward continuation pattern can be used to establish the sell trade setup. That is how one needs to mark. The marking I am showing it to help you identify the zones. Again, in a similar fashion, this is a daily chart of the crude oil. This is a daily chart. How to find the starting point, that is A, which is a support level. See, A to B is from a swing high to swing low, we are taking it. So now we are drawing it as the start of the trend. We are understanding the reversal points. Again, how we are seeing from 4,200 the crude oil has been falling. The swing reversal starts here. So we are drawing a Fibonacci grid. Then again it starts falling from the retracement zone, that is the golden ratio zone 38.2 and 61.8. So from there the price has started falling back again, exactly touching the points. Hope all of you can see the charts. I believe so. Chart is visible. Say yes on the chat box. The presentation is visible to all of you. Great. For everyone it is visible. Then we can continue and hope all of you are understanding the key points where how the grids can be drawn. Let's get into the practical aspect of it in few minutes, guys. Give me few minutes. Let us understand the theoretical concepts now. Yes, definitely, Mr. Sachin, you are going to get the recording. But the practical application, what we do it with the charts now, going ahead, once we finish in few minutes, like 10-15 minutes, then you are going to learn the practical aspects rather than getting into the recording. I would recommend all of you to go through the session and apply the understand and learn the practical application with the charts. See, here is an Fibonacci extension. This is an intraday chart, 3 minutes chart of a auto index, from where intraday gap up has occurred. The retracement to the golden ratio has come in, and the price has started with the extension going up continuously throughout the day. How to identify if the price retraces towards the golden ratio? The price is retraced back here from low to high, point A to point B. If you would have drawn, the retracement has been towards 0.382. A simple moving average also has been drawn, and clearly over a period of in an intraday the extension has happened. So let us get back to the charts. The practical aspects of trading Fibonacci is what I want to share with you guys, rather than getting into the theoretical aspects. I don't want you to get into the theories of the. Hope the Nifty charts are visible to all of you. Yes, definitely, Mr. Abhishek. I'm going to show it with the charts. The same power of golden ratio is what we are going to learn now. So what have we done here? You want me to zoom up? I have marked the Fibonacci grid from the starting point. What is our starting point? Why it is our starting point? See, here is the start of the trend. This candle low is the start of the trend. From the journey of the bullish candle, the start of the trend has been marked. Let me mark the Fibonacci grids for you. Let me mark it out. Okay, fine, my dear friends. Start is A, starting point. What is the end point? Hope you have seen how we have drawn it from start to end. This is a 1 hour chart. What I'm sharing it, this is a 1 hour chart where we are drawing it. Let us come to the different smaller time frame also and higher time frame also. On a weekly, I have started it from the point A to point B. This is how it has been drawn. Nothing great, nothing exceptional we have done, my dear friends. It is a simple way to draw from a starting point of a trend. I have not taken this red candle because still the downtrend was there. From the candle where the uptrend has started and the reversal has started, and where the more number of points connect, there I have taken the candle zone. Here is a price consolidation, my dear friends, and then the reversal has come up. End point, this is a price consolidation. So this is what has happened after a price range bound consolidation, and the supply down zone was created with a hammer shooting star, and then a long bearish candle reversal has occurred. So starting point to ending point we are drawing a Fibonacci, and the retracement has been towards the golden ratio, that is 61.8. When the price starts moving from start here and the price reverses this big candle, that is the reversal point. So from swing high to swing low, then only you are going to know the end point is there. See, starting point is from the start of the trend, ending point is the end of the trend, why call it as. That is why it is start at A, end at B is been marked. C is marked here. So basically this is how we are marking the points from the reversal. 38.2, the reversal has occurred, from where you could have got the entry. Then again what you should do, here we are marking it here. Once the golden ratio is marked and the price starts reversing from there, we are seeing it in an hourly chart. How to take the entry in this trade setup? Once the price crosses the golden ratio, it is imminent, the trend reversal is occurring. So we have drawn on the hourly chart. Let's say on an hourly chart the grid has been drawn, right? So what to do? C1 becomes a area of support or demand zone. We call it as support or demand zone, C1. So let us get into the, it also shows the strength of the trend in the markets. Whenever the retracement is not more than 50%, then it shows the strength of the trend and the direction of the trend is strong. If the retracement is less than 61.8% or 38.2%, then it is more stronger in the direction which is going. So 38.2 retracement has been done. Let us come back to the 5-minute chart for a day trading setup. Hourly chart, we have defined our entry. So here a small trend reversal with the swing high has been broken out. Above this I am going to buy. 25,863 is my entry point for the trade. 25,863 with the gap zone below as my stop loss. 40 point stop loss. What would be my targets? My first target could be 25,948. How to measure it? I'm going to show it to you how to measure it. I'm going, where, wait, my dear friends, how the targets can be measured. So basically 87 points is my first target zone. 40 points is my stop loss. Below the previous candle we call it as, or below the gap zone, I would keep the stop loss. Do you guys agree the risk reward ratio is more than 1:2? This is how trade needs to be established. Above that we can define two targets. Basically this is the larger target of 231, that is target 3. I'm going to also add on to the, just purely using the Fibonacci and a trend breakout, I am taking the trade in the different time frames. We are plotting Fibonacci within Fibonacci. let's say my second target is this. $145 is my second target. So what we have done it on a hourly basis. We have taken the Fibonacci retracement. It has hit the strength of the trend is eminent in an hourly chart. Hourly chart, we have seen the Fibonacci sequence very clearly, and it has retraced towards the golden ratio. So now near the demand zone C1 we are entering the trade. On a 5 minutes chart, similarly in the Nifty, now I am marking the points. How we are marking it, I am going to showcase it here. See, once the reversal occurs here, after a gap is created, and if the retracement crosses this 0.618 zone, then you are entering the buy trade setup in the 5 minutes with the stop loss below this gap, as there was a gap. Or you can keep it as 60 points, 40 points I would keep as my own stop. And my target, first target would be at least 87 points from here. Once I enter, my first target would be 87 points from here. 40 points stop loss, 87 points non-stop rally. 1:2 is the risk reward ratio. And then the consolidation zone again in this retracement, and the second target objective, that is purely within the intraday. I believe on the 27th October you were able to capture 145 points, my dear friends. 145 points. Do you guys agree with me with this Nifty trade? It's a very simple, using the Fibonacci technique. If you understand, give thumbs up and start yes in the chat box. Type yes. Why? This is how, with low risk high reward trade setups using the Fibonacci, we are plotting it here. Great, great. Hope the session is interesting to all of you. Yes, you have to figure out the retracement and the power of the trend. A power of the trend is whenever the retracement is less in any time frame or any trend, the trend is strong. When it is lesser retracement, either on the upside, if the market is rising and small retracement comes, then the trend is much stronger, like around 30%, 40%, within 50%. If it retraces more than 50%, no settings, nothing. From the, you need to identify the starting point as point A at the start and point B at the end of the trend. That is what is required. No settings, no rocket science, no magic. Then what happens? Again a multiple demand zone occurs in the Nifty. Now I'm going to show you the practical aspects of Nifty. This is a recent example what we have seen now. Last 2 days, currently Nifty has retraced more than 50%. Yes, Nifty has retraced more than 50%. What has happened with the Nifty? Why it is happening? Let us see in the conjunction. If we take it as a ABC pattern or WXY as a trend, This is basically the Nifty chart. I am going to just in a simple way move the grid. The recent marking of the Nifty, we are, yes, downtrend example only I am showing, sir. Now what is happening with the Nifty, and also shorter time frame also I'm going to show, and also one more bigger example. Let me plot it, guys. So Nifty has fallen from 26,097 to, let us say, 25,645. 25,645. So here the strength of the trend is imminent. The like reversal, even the retracement is not more than 38.2. Nothing is perfect in markets. You have to understand the behavior. Once the long candle is formed, the bearish candle below the 100%, what has happened, the continuation would happen here. So what needs to be done here is very simple. Once this candle was formed in the 15 minutes, from highs of 25,658 to 25,607, this candle is formed. There has never been a closing above the swing highs. Their consolidation has may have happened long. Hold candles have not been broken yet. So what we are doing it here is very simple. I am replacing it. Now it is trying to cross this threshold of 25,508, 25,615. Let me call it as 25,630. 40 levels crosses, market is much stronger. See, false break of a channel has occurred, then again it is consolidated and taking the trend up. Still we are in a downtrend, we are not out of the woods, but reversal has occurred. Here what has happened in a very simple manner, we call it as in the Elliott wave terms. We call it also as a principle of equality. This is what has happened in the markets. This is how markets have been reacting. If you replace this one from here, the swing high to swing low, what we have marked, from there, if you mark it in this zone, exactly the principle of equality. Why 25,335 was so important? Could you guys identify the bottom? Can you identify the bottom using this in a very simple technical principle of equality with the Fibonacci of the Nifty? or you could have traded on the downside. Here once it was broken, you could have traded on the downside as well. Once the price was broken this range, you could have traded with the 25,700 as a stop or 710 as a stop. Any rises you could have sold the Nifty with the 25,700 710 as a stop loss. The price was clearly eminent that this breakdown of 650 was the very important key cluster. Similarly, same 630 to 650 has to cross for the reversal on the upside for the Nifty. So can you guys see it? I have marked from point A to point B, and here the consolidation is very small. Then again the continuation of the pattern with the bearish candle has come. Well, my entry points are different two-stage confirmations, as I am a risk-taking trader. Here, very simplistic way. Even in this zone, if you take the entry after the golden ratio was broken here, what is the price of it? Currently we are seeing a smaller degree charts. Okay, let us mark the zones now here. So what happens Monday? What is crucial? 25 480 to 460 below. One can sell the Nifty. 460 below, it is weak. Similarly, in that sense, if we cross this zone of resistance 25 560 70 above, it becomes bullish for 615. 25 615 to 640 crosses extravagantly bullish. So that is the zone of confluence for the Nifty. Now we are marking the points here. So guys, we are marking the zones and the points. How to mark the zones using the Fibonacci is what we are learning it here in a very simple way. The simplistic supply demand clusters we are trying to understand. Similar markings are used here in this chart. To understand, I have got it to the more deeper points of a 5 minutes chart. It's right to left we are seeing the charts where the more number of points connect with the price, demand as well as the supply zones, my dear friends. Very simplistic manner I have marked the zones for you. How you are understanding it here, the resistance has been hit as well, is what we are seeing. D2 has to be crossed, else C1 has to be broken. C1 has to be broken. C1 has to be broken. I would give a leverage of 470 instead of 460. C1 has to be broken on the downside. D2 has to be crossed for taking the trade of Monday. Are you guys clear what is the range for the Monday? Tomorrow's trading session, what could be the range? Basically, this could be the range for tomorrow's trading session. There are multiple other methods which I use. This is just using the Fibonacci. I am giving an example. This is just a part of it, not a heart of it. Understanding it in one method also give us excellent results. So this is the range for the Monday. Either way breakout has to happen. Until the dips holds, it's a buy on dips market for Monday as of now. So still the trend is not yet reversed. I would wait for the trend reversal to act upon. So these are the zones what and how we can understand the Fibonacci with the grids in a simple manner. Okay, now I'm going to get into the intraday charts of the Nifty. What happened on a Friday's trading session and how the trading could have been done. Let's understand it in a simple power packed way. How you could have traded, because it was a gap down market. Let us say the market was gap down. First point, my entry would have been above this golden ratio. So you might be confused here. I could have drawn it from here. I could have drawn it from anywhere. The late entry would have been done after a three white soldiers consolidation and the rally has started towards the trend. So what I would do, today's open the bear candle, the strong trend has started. From there I am drawing the fib. So once the golden ratio is crossed, I would be watching the trend reversal. The 50% also is getting crossed in this time horizon. So we will get on the 3 minutes a beautiful entry of a 50% crossover and the price breakout above the demand zone. So multiple C's have been marked here. C1 is a breakout point. Let us take it as we need A and B also. So let's do it like this. Let's take it this as a starting point. Once the gap down occurred on the Friday session, then from there what happens? The fall comes, the retracement starts, consolidation starts, and you could have entered once the price starts trading above. See, usually if it starts trading above golden ratio, traders enter, but once it crosses the 50% of the downtrend, the strength is weakening on the downside. So there you can enter with this as an entry point. What is our entry point above this? 25,386. That is C1. In the Nifty, entry point was above 25,386 with a stop loss below the previous swing low. Well, you could have kept a stop below this only 367, but I would keep it as below the swing low. SL below 25,360, sorry, 356. Okay, that is a 30-point stop loss. What can be our targets? That's the beauty of it, my dear friends. The targets can be, first target would be the start point, I would say. Let's say it's a 64 points. What is the stop loss? Can anyone calculate and tell what could be the stop loss? entry point and the stop loss point, can you calculate and tell? Exactly, it is 30 points. Do you guys agree? Now we are going to see the extension of targets, how the targets can be extended. Let's make it simple to make you all relevant and objective. So you guys agree the power of it, how one can establish the trade setup with the extension here. The stop loss is 30 points. The first target is 64 points. What could be the next target? The extension zone. 115 points, almost quadruples. Let us keep it as the final extension as the third target. Let us keep the fourth, this one 150%, 161.8. So guys, what is the third target? It's almost like 150 points. The beauty of it is 150 points almost captured. 1 is to 5. In the Friday's trading session, just using the simple power of Fibonacci, we are doing it. 25,386 minus 25,356. So what is the stop loss? 30 points. What is the third target? See, let us say first target 64.45 divided by 30. It's 1 is to 2.14 risk reward ratio. 115 divided by 30, 3.8. 147 divided by 30, 1 is to 5 is the risk reward ratio for entering the trade. The Friday's session, if you would have applied a simple Fibonacci technique with the extension. So guys, are you understanding it, and are you clear about how to use the retracements as well as extensions with the supply demand zones as well as price action? Is it clear? Any questions? If you are clear, say yes on the chat box, or if you have any questions, feel free to ask anything on the chat box. So what is the beauty of it? Triple R, the risk reward ratio. That is the beauty of it. Target is you project the extension, my dear friends, project the extensions. Similar way, if the extensions are there from where the entry point has been done, stop loss is defined below that, then the target can be the extension zones, a target 1, target 2, target 3. I'm going to mark here with the extensions. Nothing else we have done extraordinarily. This is the target 2. This is the target 3. So is the setup clear for all of you? This is just a tip of a iceberg of Fibonacci. Fibonacci is exceptional tool if used with conjunction, and different other techniques are there where if you can apply it. Yes, similarly reverse can be done. Mr. Sahu, similarly reverse can be done. On a 3-minute time frame, I have shown you how one can use the Fibonacci, and also on an hourly chart we have seen. Well, other parameters have to be used in conjunction with Fibonacci. It's not only Fibonacci which will result you the reversal patterns. So this is a bank nifty chart. The start of the trend as well as the end of the trend is marked. From where basically this you can see the reversal at 38.2 where it has been holding. It is a retest of the demand zone from where it reversed, like 57,300 above the reversal has occurred with the 57,230, let us say 220 as a stop, like around 80 point stop if you are trading. And if you want to trade only the breakout, 100-point stop could have been established. 100% reversal confirmation occurs if you are trading. The continuation and the extension continuously starts happening. So this is how it is applied similarly on the bank nifty. I'm going to end the quote with the mid cap nifty, which is a beauty of weekly charts and the power of Fibonacci. Let us see the power of Fibonacci. So what is the power of it? Here we are seeing the mid cap nifty charts from the start of the trend from 11,200 in 2020 towards 33,000, then the retracement consolidation to golden ratio 68.2. From there exact extension of wave 3 which has happened, and the wave 3 has ended in the, let us say, September 2024. That is what we are seeing, 161.8. This is the weekly chart of mid cap 100. I am not showing you a daily. This is a weekly chart of extension, what we are seeing it here. What is happening next? That is the power to understand in the Indian equities how even on the intraday 1 minute, 2 minute, 3 minute time frame to weekly charts, if we are applying the Fibonacci, practical aspects of trading can be done. So that's it for the session in the today. I am going to enter into the Q&A part of it. If you have any questions regarding the Fibonacci, you can feel free to ask. Thus, law of nature, what we have discussed, how it can be applied in different indexes. I have showed it on the bank nifty, or any of the charts, any stocks also you pick, it can be applied. So great, guys. Hope all of you enjoyed the session. Any questions, please feel free to ask. This is just a tip of the iceberg. If you start learning the Fibonacci, a 2 days complete Fibonacci session has to be done. I have shared a small trading insights. If you use the Fibonacci in an advanced way, there are different techniques as well as methods with the Fibonacci. I have shared within the available time span 1.5 hours. I have shared a small insights on the Fibonacci series and the sequences, and how practically one can apply in trading with a beautiful risk reward ratio. The extraordinary application with the advanced techniques can be learned with the Fibonacci, which I use exclusively in my trading insights and sharing the charts and the patterns. So that is due to time constraint, I couldn't share any of the questions. Please feel free to open up in the chat box, or I'm going to allow you to unmute yourself so that you can talk with me. Yes, Mr. Matthews, targets can be marked with the extensions or retracements. Recordings would be available in the webinars. You can mail it in a 1 or 2 days. Maximum by Tuesday morning, you will be having the recordings of the session. You will definitely have the recordings. Great. Mr. John is asking on the HDFC Bank. Okay, HDFC Bank, you want to see it on an intraday basis, or you want to see it on a what time frame you want to apply the Fibonacci on the HDFC Bank? I would prefer using Fibonacci on the usually on the time frames of weekly, sorry, on indexes, on intraday as well as larger degree time frames. Well, stocks, rather than getting into low beta stocks, you'll get a better results with the high beta stocks. So this would be the good demand area. So I would mark it where the reversal has occurred. From here one can use it, the clusters. So everybody wants this as a starting point, but I would choose the start of the trend is here. So this is my starting point till the end point. Now we have retraced above the strength of the trend, the golden ratio. Once it breaks out, I'm going to see the 985 breaks. HDFC Bank looks good in the short term basis. So there is a range bound action happening in the HDFC Bank. Basically, So basically, it is hovering around the golden ratio point multiple times. Now again, the retracement towards the zone of demand is happening above 974. Yeah, 970. HDFC Bank is a sell. Below that, we are near the demand zone. So that's what the HDFC Bank is witnessing as of now. After a rally consolidation is happening, the next leg of wave 3 rise could start with the HDFC Bank. In that scenario, let us see on the stock which has fallen the most, Amber Enterprises. Let us see. So there was a buying opportunity in the Amber at 6887 and the stop was 6834, like around 50 points stop loss. It was a buying opportunity. In fact, you would have adjusted your stops based on that, some 20 points also, and the rally happened towards the extension. So a strong fall passed on by the retracement. This is a Suzlon chart. One more example. I don't think the golden ratio or the 50% golden ratio. Let me mark it down, my dear friends. What happened here? Are you able to see the charts, my dear friends? Are you able to see the charts? 50% is not crossed. It acted as a resistance. The momentum was not gaining, and again it is consolidation. The next level again, if the Suzlon crosses this zone 5780, it would have been a buy. So yeah, all the charts it would be same. It's just about the application, how you apply. Exactly, here the similar 50% retracement. The Suzlon is working beautifully on a 50% time horizon. The retracement has been on the 50% zone. Exactly, the 50% zone has been hit, and then again the reversal starts where the sell entry have been taken with this lower swing low 58.27 with 30 paise stop loss. The trade could have been taken. Your entry point would have been 58.27, 58.57 would have been stop loss. What was the target? Let us see the extension of it. Where would have been my sell entry? Let us let me show my sell entry for you. My sell entry would have been this candle. Below this, obviously I would have sold. The 50% retracement has happened and I would get the entry for it, and my first target would have been this. trend is down. With other parameters I would have used definitely. So here what we are doing, it's a small 30 paise stop loss what we are taking it. From there the entry would have been taken. What would be the target objective? The first target, what was it? 30 paise is your this one. Okay, my dear friends, upside it's zero point 0.3, downside is 0.6. So the risk reward ratio has crossed 1 is to 2. Now I am going to plot the extensions. I am going to reverse it. Just I am going to reverse it using the Fibonacci. How the trends on the downside also can be written. We are seeing it how it can be written on the downside also. The extension of 1.382, let us say it as a second target.
त्यावर फटका मारायचा आहे, असा बुक्का बुक्का मारायचा त्याच्यावर. तू कॉइन टाकलीस का आतमध्ये? बुक्का मारला की पाणी येईल आलं तर बघ.
So let's calculate it here. 1.36 divided by 0.3. What is the risk reward ratio? 1 is to 4.5. 4.5. Beauty of trading to identify. Sir, maybe you might be having a problem with your system. Hope my screen is visible to all of you. My screen is visible to all of you. Have you seen it? 1 is to 2 and 1 is to 4.5 are the risk reward ratios. What we are seeing with the Sizzlon sell trade setup. As the momentum starts waning, the sell trade setup 1 is to 4.5. 0.66 divided by 0.3. 1 is 2.2 and 4.5 are the risk reward ratios. Is what we are seeing in the downtrending stock of Suzlon. That's the beauty of understanding the Fibonacci and using it for your trading. Mr. Samson is asking regarding pre-call. Usually I trade with the top stocks or top grade stocks with the Nifty 500 or Nifty 50 stocks as well as the indexes using Fibonacci. So you have to cross check with your screen. Hope everybody is able to watch the screen. Any chart, any stock you apply the Fibonacci, it works, sir. It's not that you apply on pre-call, you apply on Bank Nifty or any of the indices. I have shown with you the Suzlon is well, HDFC Bank is well, as well as Nifty, Bank Nifty as well as Mid Cap Nifty. Provided you use it in a diligent manner. Once the 50% zone is crossed, it has started moving higher. Okay, great. You want to see it, Mr. Rishabh wants to see it on Asian Paints. I'm showing it on Suzlon. Suzlon profits are good, results might be good. What the trade can be taken on the, if the price crosses above 57.80, 57.70 levels on the Monday, buy Suzlon. $58.50 above, 58.70 above, big move will come in the Suzlon. Results have been very good with the Suzlon, can hit the upper circuit. Wave 3 could start in the Suzlon, given on the daily chart 61.
जरा राहा ना जरा स्टेटसने. मला आवडत नाही असं फालतूगिरी. 100 जण हे करतात, बघतात, हसतात. तो म्हणतो तुम्ही कशाला घ्या? अरे सगळे जगाला कळतं.
Suzlon, the correction seems to
वेळ
be getting
काहीतरी हे करतात. अरे त्यांच्यामुळे मलाच आवडत नाही. मला बिलो पॉवर्टी लाईन आपण असल्यासारखं वाटतंय की तुझ्या एका 50 रुपयासाठी मला इतका तू मारशील फार शेवटी.
targets could have been defined.
मी आता मी त्याला सांगेन दर आठवड्याला आणून टाक, तुला प्यायचं पिणं मी त्यांनी सांगतात माझे घाण तुम्ही त्या पाण्याने. तू गप्प बस आता.
त्यांच्याकडे ह्याचं पाणी हे चालू आहे, कापणी चालू आहे, त्यामुळे ते 4-5 दिवस तरी आणून देणार नाही.
अगं मी तुला काय सांगते, तू आधीच करतेस ना हे सगळं. मी करतो ते काम माझं पाण्याचं. आता बोलू नकोस तू फक्त.
All of you, that's it for the day. Hope all of you enjoy.
नाही मला आता या कामासाठी नाही फिरवायचं मला पाय हे.
And prosper together. Signing off for now. Your RV. Thank you everyone. See you all back
TDS फालतू एकदम करते हे काम आहे माहितीये काय. फालतू म्हणजे
सांगितलं याच्या पुढे
again with the weekly analysis also.
किती चेंगटपणा केलास की नाही, किती वेळा वाद घातलास, किती वेळा भांडलास, किती वेळा हे केलं. तुला काय तू 50 रुपयाची व्हॅल्यू कळते काय की यार कशाला माणसाला चिडवतेस तू सारखा अगदी ऐकायचं ना, म्हणजे किती ऐकायचं नाही एका बाईने. तुला स्वतःला लाज वाटायला पाहिजे ना की यार हा माणूस माझा सांगतो नवरा की नको असं आणू.
बोलू नकोच सांगितलं, पुढे आता मागवणार नाही सांगितलं तरी पण तू आता बोलतोय. तुझा प्रॉब्लेम.
अगं बोलतो म्हणजे तुझ्यामुळेच बोलायला लागलं ना मला. परत शेवटी आलो नाही ना तरी तिथपर्यंत. आज म्हटलं वातावरण नको बिघडवायला, तरी पण आई घातलीच परत. पाणी नाहीच मिळालं शेवटी. काय झालंय त्याचा फायदा झाला का काय नाही. मग तुला ते सांगतो कशाला कटकट करत जगतेस आता.
Yes, I am muted everyone.
बोलू नका मला त्रास होतो. म्हटलं ना ते
I am muted, sir. I am muted. Mr. Samson, I muted everyone.
कळायला पाहिजे की आता बस झालं.
तुला
What
मी
is
4
happening
वेळा
with the
रिक्वेस्ट केली,
Asian
याच्या पुढे
Paints?
जायचं नाही तिथे, तरी तू बोलतोय. हा माझा प्रॉब्लेम आहे का?
पण आता कशाला केलीस मग?
मग मी सांगितलं तुला नाहीये तिथे पाणी, ते काय लगेच तुला आणून देणार नाहीये. म्हणून
Please, those who have been speaking, mute yourself. I am muted.
टायमिंग बघ.
मी जायचंय का परत तुला आता आयुष्यात कधी?
असं नाही, संध्याकाळी पण तू वेळेत गेला तर तुम्हाला
मला आता तू आयुष्यात परत सांगू नको.
सांगणार नाही तुला सांगितलं तरी तू चिडून कशाला बोलतोय.
अजून म्हणते 10 वाजता मिळतं 12 वाजता. तू आई घाल तिथे जाऊन बस, तिथे आंघोळ कर तिथे. मला काय करायचं मला सांगू नकोस.
आम्ही सगळ्या गोष्टी काल मला यायचं नव्हतं तरी जपा, आणि तुला कुठली गोष्ट चल म्हटलं तर म्हटलं मी तुझ्याबरोबर कुठे येणार नाही. हे तू करतोस ते बरोबर आहे. तुझ्याबरोबर सगळं आम्ही.
Hope now it's clear to all of you. Oh, Asian Paint is about to cross the golden ratio. Might be there is a cross above this zone 2600 above. Once we sustain 2600 above, oh, there can be a strong trend and the momentum can be gaining as the base has been built with the Asian Paints. The retracement extension 2620 above, I would be a strong buyer in the Asian Paints. So So there is a breakout in the charts. Asian Paint golden ratio. Watch out the stock. If you are trading with the Asian Paints, there can be a good move which is coming, but adjust your stocks accordingly with the previous two candles low. This gap zone 2550 would be my stop. 2620 above, I would be buying the Asian Paints. Hope I have cleared all your queries. Thank you everyone. That's it for the day. Hope all of you enjoyed the session and learned the insights of the Fibonacci trading clusters. See you all back again with a new learning and exciting series for the next week again to learn and prosper. Thank you everyone.